In this lesson, you're going to learn about how to fill in the appropriate information that we need for using Hewlett-Packard as one of our public company comparables. Now, just to recap, we saw how in the previous video we selected the set of 5 public comps: Hewlett-Packard, Dell, Cisco, Intel, and Motorola. Now I'm going to show you an example of how we would actually pull the information we need for doing this analysis if we were working at a real investment bank by going through Hewlett-Packard's filings and then their equity research and showing you where to get their historical and projected financial information from. So here's the sheet we're going to be using. And you might notice that it looks very similar to the sheet that we're using for Apple for their 3-statement model and for looking at their equity value and enterprise value. And it actually is. It's almost the same. I took it directly from there, and it's really just a simplified version of that sheet. So we're going to be using the same strategies here. In this video, I'm going to be showing you the first half here. So how we calculate Hewlett-Packard's shares outstanding, enterprise value, equity value, and how we look at their options to figure out dilution. In the next video, the next lesson after this, we're going to be going through their actual financials, and I'll show you where to get their historical numbers and then their projected numbers from. So to start with, we see that we have some basic information here at the top filled up: the valuation date, the company name. The share units is here just to remind us that shares are in thousands throughout and to make dividing cleaner, because we don't want to always be hard coding in the numbers. We want to have a variable defined somewhere. Historical year, again, we are starting at the end of Hewlett-Packard's fiscal year 2009, which ends in October. And then the share price, I just pulled this from Google Finance on January 29th, 2010. So now to get into this information about shares outstanding and enterprise value. So for shares outstanding, we want to go to Hewlett-Packard's 10K. There's a link to it right below this video. And normally we pull shares outstanding from the very front of this page. So we see the number of shares outstanding as of November 30th was 2,364,168,918. So we have to make sure we get the units right here. Remember that this is in thousands. So we want to enter 2,364,168.918. We see now the rest of the calculations fall into place. We have basic equity value, diluted shares outstanding, diluted equity value. The next thing we want to do here is get Hewlett-Packard's option information. So this is going to be an example of a company that has multiple tranches of options spelled out in their filings, unlike Apple, which only had the one that we saw. The easiest way to find this information in any kind of filing is to do a search for exercise price. I'm just pressing enter to go through the results here. And here we see a table right under Note 2, stock-based compensation. So the shares outstanding are in thousands, so we can just copy in these numbers as is. So let's enter 415. 24129, 77523, 53094, 56997, 15953, and then 5103. So we have those. Now for the exercise prices, we want to look over in this right-hand column, over on the side. So we have 6, 16, 23, then 33, 45, 57, 69. And so we have that in place right now. So this lets us get to Hewlett-Packard's diluted equity value of $114 billion right here. Now the next step is to go through their filings and look for all these items. So cash, debt, minority interest, preferred stock, pension obligations, capital leases, and so on and so forth. So we're going to start on the balance sheet, on Hewlett-Packard's balance sheet for these. A couple ways we could find this. I'm just going to scroll to the top and go down, and sometimes they have links to the financial statements right here. So you see under financial statements and supplementary data, click on this, and then click on consolidated balance sheets. So we have it right here. So let's start with the cash number. Looking at this balance sheet, really the only two things here that should be counted as cash are cash and cash equivalents and short-term investments. Nothing else is really an investment or a liquid investment in the way that cash is right here, if you look at these items. So we're just going to count these two. So we have 13,279 plus 55. Now on the debt side, let's go over to the other side in the balance sheet. So we have notes payable and short-term borrowings. That's definitely debt. The rest of the items are not debt. And then we have long-term debt here and then other liabilities. So let's add in notes payable and then other long-term debt. So we have 1850 plus 13,980. For minority interest, normally this shows up on the balance sheet under either minority interest or non-controlling interest. So we don't see anything here. We could do a search for it and just double check minority interest. So they do have a few entries here, but it's not listed on the balance sheet anywhere. So if it's not listed on the balance sheet, then generally we're not going to bother with it, especially when, as the case here, we don't even have any numbers for it. So let's go back. I'm going to enter 0 for minority interest. For preferred stock, I'm going to do a search for preferred stock now. Once again, this should be listed on the balance sheet. So here we see it. 300 shares authorized, none issued. So preferred stock is also 0. Now, for the unfunded pension obligations. So looking on the liability side in the balance sheet, we don't see anything here that jumps out and says pension obligations. However, we do have this line item, employee compensation and benefits right here. So we want to look at that in detail because we might want to be adding in some or part of this, or maybe even a completely different number. Also, we have this other liabilities line item right here. We don't know what's included in this, and that could actually include pension obligations as well. In terms of the other items listed here, so capital leases, restructuring liabilities, and other obligations, I'm going to say 0 for other obligations for right now. We might change this depending on what we find later. For restructuring liabilities, this accrued restructuring charge right here, this one should probably be counted because this is part of a plan that HP went through to downsize, to rearrange departments, and if someone actually acquired them, then they would probably have to pay the rest of this. So I'm going to enter in 1109 for now. To figure out whether that's correct or not, we need to look at what's included in this other liabilities line item. For capital leases, we'll do a search on that later. Unfunded pension obligations, that's what we're going to turn our attention to right now. So let's scroll up to the top and I'm going to search for pension. We see a lot of references to it. I'm going to keep scrolling down because we want to look for any graphs or charts that give us all these numbers. So retirement benefits right here. They're not giving any numbers or any graphs. Keep scrolling down. Talking about their funding policy for pension plans right there. Keep scrolling down, and it looks like it's hidden down here in the notes. So here's an entire section on defined pension and benefit plans. I'm scrolling through this because we want to see where they talk about whether the plans are funded or not. Okay, and so here's what we're looking for, this category called funded status. So what this is showing us is how much they've actually put in their plan assets right here for these pension plans, and then what their actual obligation is right here. And they actually do the math for us because this plan assets less benefit obligations number, this is exactly what we're looking for here. So we want to make sure that we include the appropriate numbers here. We see that their pension benefit obligations exceed how much their plans are worth, which is pretty much always the case. So we want to be getting in these numbers. We don't want to use a negative sign because these are obligations that someone would have to pay back. We want to be adding them to enterprise value. So we're going to take the US ones for 2009, the non-US ones, and then the post-retirement benefit plans. So I'm going to say 1663 plus 2819 plus 640 right here. So now we have a sense of how much our unfunded pension obligations are going to cost a company like Hewlett-Packard. That's pretty much all the useful information from that section. Whenever you're adding back pension obligations, you should look for something like this that spells out how much is funded and how much is unfunded. For the next part on capital leases, let's just do a search for capital leases. Change it to capital lease. And they have something on their interest rates here. Capital lease commitments. So this is showing how much they're paying out in expenses each year. Okay, and here's what we're looking for. Contractual and other obligations. We have capital lease obligations right here. So unlike other companies where sometimes they list everything as an operating lease, in this case, Hewlett-Packard is actually spelling it out and telling us that for some of their property, they actually have an ownership option at some point in the future. They have depreciation. They might have interest expense payments. So it's not like a normal rental operating expense. So we want to be adding in this number for capital lease obligations right here. Now it's not clear whether this is included anywhere on the balance sheet, but it doesn't really matter because it's certainly not included in debt or anything else that we've already added. So I'm going to enter 568 right here. The only other thing we want to check on now is what exactly is included in other liabilities, because depending on what's in there, we may have to add back some of those items as well. So I'm going to search for other liabilities, and here we go. So we have pension, post-retirement, and post-employment liabilities. We're not going to add these back because we've already added back the unfunded portion of their pension obligations. You see that number right here, so we're not going to count that twice. Deferred tax liability, that's not part of enterprise value. Long-term deferred revenue, also not part of enterprise value. And then other long-term liabilities. Okay, so I just kept searching for other liabilities and said, each be included in the long-term portion of the restructuring liability of $356 million and $670 million respectively in other liabilities, and the short-term portion in accrued restructuring. Remember from before that this 1109 number was the accrued restructuring expense, so this is telling us that the long-term portion is 356 and the short-term portion is 1109. So I'm going to add in the 356 right now. And that takes us to the end of what we need to do to calculate Hewlett-Packard's enterprise value. Now we could go through this and look for other charges and other items that we should be adding to enterprise value. I've already done that, and I can tell you the answer is that this is pretty much it. So at a real bank, you might be a little more exhaustive, but for our purposes, this is fine. This example was good, and I wanted to go through it because you saw some unusual items such as capital leases, pension obligations that you don't see with every company. So it's good practice to just see that and get used to what is included in there, and then how you deal with them by adding them to enterprise value as we have done here. So that's how you go through and calculate enterprise value and equity value for a real company like Hewlett-Packard. Coming up in the next video, we're going to complete our information for this public company comparable by going through and filling out their income statement, revenue, all the way down to EBIT and EBITDA.